It's Hedge Heads, brought to you by American Federal Bank. What are we talking about, John?
I have a special secret about the corn market that gave away the top, or it gave away the area the top was in. So we're going to go over something that's near and dear to me, spreads, and how that's going to help you in your corn marketing this year.
Awesome.
Welcome to Hedge Heads, where hosts Jon and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, we went from shorts and Birkenstocks weather straight into sit by the fireplace wrapped in a blanket.
Yeah, my buddy was already in the office. He came and he's looking for tickets to Florida. I mean, it's a little early. I told him to pace himself. This is December 2nd. Winter came in early. People are arguing against me. Sure, it's coming earlier than this, but it came with snow that stayed, and I hit the Ohio Valley. So a lot of people, anybody listening to this, probably has snow, and we just don't need those few extra weeks. It's been nice the last few years. It's kind of started mid-December, but it's here. Everyone's already complaining, and we're only at the very beginning of December, barely December.
I mean, it doesn't help that it was -2 here this morning.
No, it doesn't help. But I mean, it's like, look at where we live. We got away with it for a couple of years, and now we're going to pay the price, I'm sure. So get the projects ready. We'll make the podcast extra. Special. We'll put a lot of effort into it this winter and come out with some magic, I think.
I will say, on my drive to our Thanksgiving dinner, which we did not have an insider episode last week because it was Thanksgiving, but on my drive to Thanksgiving dinner, I saw a new corn storage solution.
What's that?
It was still out in like 5 or 6 fields as we drove by.
They've done that a few times over the years here, and it's actually the guys that I've known, some guys that have done that, not on purpose, just that's the way it ended up. And it's actually turned out very well here, leaving out in the field for the last couple of years.
Yeah.
Yeah. So it's
definitely drier right now.
Yeah, it's drier. You can have bad results, but it's been surprisingly good, the guys that have had to do that. You never know what happened there, whether the equipment failure or don't have any friends or death. You never know. But there is a few fields, not too many though.
No, it was not many, but I was surprised, and it could very well be something happened on that farm because it was one farm that had left.
Yeah, there's actually an outfit that goes and if there's something bad happens, or they do help with that. I can't remember what the organization's called, but that's kind of neat. But mainly the phone calls right now are going to be I've either got a roll basis, or roll the contract at the elevator, or I got to pay 7 cents of storage. What do I do? And most of those calls are done now because we're in deliveries for December. So we're looking at March. Now, this is what happened last year. And hopefully with this episode, we're going to go into what to be looking for, for tops, or how do I know when to market? You go online nowadays and you're going to be able to read whatever you want. Information's being exchanged more freely than it's ever been exchanged before. More people have smartphones, more people tune in to all this stuff, and more people are more confused than ever because you're going to hear both sides. You're going to have, there's a couple guys on Twitter that are always bullish. They were just talking about the spreads running in beans and corn. And I even commented to these people, and they don't comment back, what spreads are moving. That's really what you need to look at. And that's what gave away last year's top was the spreads. So what does that mean? It means that December and March are now off the board. So we're looking at March and May corn. So we'll start with corn and kind of run through what happened last year. So we're at -8. Where we were last year, pretty close to -8. We were climbing a little bit, and it was kind of coming up, and it was the corn market was much stronger, but we didn't get past -5, meaning March was still 5 cents under May. We didn't get inverted in the front ever. 3 cents better than where we were, and the high for that spread, and this is important, was December 19th. Then the spread started to widen out, and this is going to be an exciting story, I promise. The spread started widening out, but the corn kept going higher. And that right there was a divergent, the first warning sign. And I wish I would have listened to more of these warning signs last year.
Right.
So we went to -5, 3 more cents than where we are, to December 19th, if that's not too confusing. So that's when the high of the March May came in last year, meaning that was as narrow as the March corn contract got to the May corn contract. This is the only truth teller in all of commodities. You can go on Twitter and get whatever you want, and you're going to hear whatever you want to hear on both sides. But the spreads are what are going to tell you what the commercials need. They're not going to say, hey, we misplanned this. We didn't expect this export demand, and we're way short bought. Just hang on, farmers. Hang on to that stuff in your bins, and we're going to pay way more. You're never going to hear what they need. You're only going to see it through what you know as basis. And that's price difference between the futures and the cash market and spreads, a very close cousin. Now, everybody's more familiar with basis than spreads, but spreads really tipped a guy off to the corn market being not what they said it was last year. Very unhealthy amount of carry started going back in the market. So go to December 19th last year. That's when it went from -5 and worked its way down to -10 by January, which would be below where we're at this year. So we have a lot more corn around than we had last year. It started failing in January and continued to widen out. And that is what you're looking for. So if you're trying to time this corn market, you're looking for the March, May to give you a signal when corn is starting to fill the pipeline. And that's exactly what happened. They needed corn. They narrowed the spread up. Then guys started selling. And that's exactly what's going to happen this year. We're rallying. We're not rallying as much. Exports are excellent, beyond excellent. I think we're running 274 million bushels ahead of where we were this time last year, or ahead of the USDA's estimates. So there's no problem there. But the pipeline is going to fill up. The spread's going to tell you when that's happening. And that is the only thing that you can trust in commodities to tell you what the commercials need. That is the secret. You
mentioned basis. I do think it's important to talk a little bit in basis. They are close cousin. I mean, the spread and the basis, but watch that basis as well. Is it improving or is it not? Can be a sign. But you're right. The spreads are much more. Yeah, and educate me.
Well, the spreads are going to be the whole country, where the basis is going to be more local. Now, you're already seeing this and this is exactly what I'm talking about on Twitter or Facebook. You're seeing all these posted good bases.
I don't know.
You're seeing this posted, and they're using this as their bull argument. Like, this is it's over last year at this time. Well, last year at the time, that region might have had a poor crop where the basis was, a very large crop where the basis was wider. This year it might be shorter. Like in Ohio, I've talked to a guy, very good basis. It is very similar to last year, but last year the price was a lot higher and the basis would have been wider if they wouldn't have had 2 short crops. But my point is that you can't tell from one little region to the next. Now, grain informant is a guy I've mentioned before on Twitter. He's starting to put out great sheets. If you want to follow where basis is at all these ethanol plants, he's got the soybean processors.
Yeah,
wonderful guy.
Great info.
It is. That's why we keep going back for guys like this. He's trying to get a following. He's fairly new, but he's gonna get a huge following because this is the stuff where it's nice and organized. You can see how it's improving or how it's widening out. They have our ethanol plant on there, Otter Tail. So they might not have every single one, but it gives you a good clue. And I'll get his next time. I'll get his exact call sign. I can't remember what it is. I think it's at Grain Formant.
Grain Formant, yeah. So like grain and informant mashed together.
Yes,
and a great follow. Highly recommend.
Yep. And so that's where you're looking at that information. You're going to follow basis. At least he's got sheets so you can see a wider region of what's going on everywhere. But with basis, you can make the argument a little easier that it's bullish, where spreads are a lot harder to move. That's the commercial side of stuff. A lot harder to move. So that definitely tipped everybody off to, you better be marketing your corn as the spreads widen out. So where are we this year? And what does it mean? We're at -8. It means absolutely nothing. You look at where we were in 2021, would have been 2020, 23, 22, 21. We were near zero, -2. Those years, we were at 1.1, 1.2 billion bushel carryover. At 2.1 billion bushel carryover, -8. I'd say that's good, though. I mean, it's good for being normal. Could be at -12, -13. But there's nothing out of the ordinary that says this is anything but farmers holding, and you have very good demand. That's why we have the market we have. That's why it's stronger than everybody thought. So when the farmers sell or producer sells, which he will have to eventually and raise money, you watch those spreads. If the spreads continue to narrow up, consider holding longer. If the spreads start to widen out, that, start making your incremental sales. And if it starts to widen out fast, start making it quicker. So base everything off spreads in corn is my advice this year as far as your physical marketing goes. Just watch that. That's what tipped everybody off last year to this was trouble.
I will say, I mean, it does matter what the number actually is. Like you mentioned, -8, -12, whatever. I mean, it could be +20, it could be -30. That number matters, but what matters even more is how much that number's changed.
Yeah.
And how fast it's changed. So it doesn't necessarily matter that it's -8.
Yep.
But if it's all of a sudden -12 tomorrow and then it's -15 the day after, like that's a sign. If it's all of a sudden it's +2 because there was Ukraine news, like today there was a little blurb, that would be a sign. That's a big move towards the plus side. To hold, if it's moving fast minus, that would be a sign to maybe make some sales.
Yeah, let's go through the markets too. There's very different markets. Wheat, very hard to move the spreads there, but they do move. And when it did move in 2008, the big market in a 9, there was guys that were on the floor that for generations, they made money spreading and their families made money spreading down there, were wiped out in a few days. That's how fast it changed and got inverted.
Yep.
Where that can change fast, tougher market to do that. So that's meaningful in that one. Beans are trickier. Beans are a market that's a lot smaller, and when they need them, they need them. So you can really rocket that January over that March really quick, and they did last year. They even did to some degree this year, and then it can fall back down really quick. So just know your personalities in your grains as well. Beans, although it's very meaningful in beans, it can be shorter term, meaning the pipelines fill up fairly quickly. But if it's an inversion and it keeps getting inverted, that's a very strong sign that there is something indeed going on there. So, and then corn, lastly, that's a very difficult market to move. It's changing a little bit with the amount of money funds put in here, but still, it told a guy that this corn market wasn't real last year. I ignored the sign. I'm not saying I had it nailed, and I completely oh, that's weird. This shouldn't be like this. Let's put on more bull spreads.
We did talk about it. I'm sure you can go back. Oh, yeah. We talked about it. I put out
tweets about it a full month before the top came in, how weird the spreads were acting. You know what I mean? And you can go look at my Twitter and it'll verify that I did put that out there, how this doesn't act like that in a bull market. So it's the one thing that will tell you the actual answer if you know how to read it. And if you don't know how to read it, you certainly can ask a guy like me who watches that probably too much. I watch spreads all the time. But then
you also have to actually pull the trigger, which is way harder than just having an idea of what it's doing.
Yeah, all the while, corn's marching up, and everybody's online is telling you how bullish this is. USDA's numbers are even bullish, but the spreads told the truth last year. And they told it for at least a huge warning signs for a month and a half before the collapse happened. So it's not like you see this thing and then the next day you're going to, the commercials need this stuff, and now we're going to go rocketing up. What would be a sign if March continued to gain on May right now as farmers were selling? That'd be a very strong sign that, hey, maybe this isn't 2.1 billion. So guys spend way too much energy arguing over USDA's numbers when if you got familiar with this stuff, you could just completely get rid of the noise and tell what a market is much easier. In 2020, the great grain robbery, on paper we had 3 billion bushel carried over. For a year and a half before that took off, the basis and the spreads were both saying that the corn's not there. That one took a little bit longer than one would have wanted to.
That's a timing one.
That was.
The timing was super hard.
And many guys were long. Many guys were long in 2019, and everybody kind of fell short of the finish line. And not only that, sold the next year's crop. So that was probably the most difficult one in 19 when none of those acres are there because of prevent plant. But still, you had 2 years of abnormally good basis through harvest. And summer, it was always good. Which was telling you that we were running out of corn this whole time. And then when the truth finally came out, it exploded. But the spreads were saying that, and basis was for years before it happened. And what good does that do you if it takes a full year or two? That was a really abnormal thing to happen, to have 3 billion bushels on paper and really have no corn.
Which is why it's called the Great Grain Robber.
Yeah, John. The Great Grain Robber. But the basis did tell a guy. Anyways, we didn't even get distracted. I think this is probably one of the most important. It's long overdue that we talked about it. Mm-hmm. That is how you tell what the commercials need. And again, like you see a large rally and you see the spreads continue to narrow, especially in the front. The fronts are the most important. Then that's your sign maybe to hold off sales and wait. That's your only indication of what they actually need in the commercial pipelines. And there isn't anything else besides that. Basis, again, close cousin.
Yeah.
But you can get thrown off by regional stuff pretty quick. Basis stinks here, by the way, and that's just the way it is. We got a lot of stuff around here.
Yeah, absolutely. So give me some real numbers. What are we looking at? Corn? What are you looking at? What are you watching? I mean, you just mentioned you're watching spreads, but give me some things where.
So we're -8, and last year the pattern was it was a -5. It was better than this, and the previous 3 years before that were well over this. So this is definitely not. Everyone wants to say these USDA's numbers are way off, and it doesn't look like it according to the spreads so far. So watch that December 19th time period. That's when farmers sold plenty, although we're not near as high as we were last year. So you can't just count on these dates being the exact dates.
Yeah.
But just watch how this March, May acts going into January. Into mid-January. And I think that'll be all the while make incremental sales on the way up. Add numbers that make sense for your farm. It's not hard. And then beans, talk about specifics. I would light a little fire under marketing there. On the cash side of stuff, it's great that we have these trade deals. It's not fast enough, and now we've gotten to a price nobody else in the world wants our stuff either.
Right. So
unless something changes here, these prices are very attractive. And if you're not selling at these prices, what you're holding for is South American weather. There's nothing wrong with holding stuff. Just know why you're holding it. You're definitely not holding it because fundamentals are ripping right now. They aren't. As a matter of fact, like I say, you look at the exports and what was it, the worst in 18 years for this week? It's terrible. This is where we should be moving piles of beans.
There were flash sales on Friday for beans, and it was way under what was expected.
Yeah, we're not hitting the numbers, from China. What are we, 22% where we need to be by the end of the year? So they got not that it can't happen, it can. So if you're holding on to beans at these levels, you're looking at either China's really going to ramp it up, and they need to, or South American weather, and that's why you're holding. So I would give me a call and I'll tell you exactly the levels that we're looking at for sales. That one I'm in a hurry for. Corn, watch the spreads, and then quickly on to the September corn calls. I really like these. You're gonna have to call me for specifics on timing, on everything. When's the last time I said I like corn calls? Can you even remember?
Maybe are you talking buying them or selling them?
Buying them.
Buying them. Yeah. I will say you mentioned buying them as courage calls over the last few weeks. But
I
haven't heard you be like, yes, let's do corn calls.
Yeah, when you look at the prices these are selling for and you look what you get for it, and it's not even a high priced contract. It's like there's carry there, but then you look at where July is versus September. July is over September, and all of a sudden you have a pretty inexpensive contract. And then what is it? 11 cents under December? What this gets you is all the South American weather and corn, in the corn weather, the second corn crop. It gets our U.S. planting weather, and it also gets our entire summer. We're selling for what, 24, 25 cents, which isn't nothing. It's $1,400, $1,300, but per 5,000 bushels. but it gets you through the entire summer, 5-10 cents out of the money. So the way they have these priced is they don't think this thing's moving more than 35 cents from now into midsummer, which is insane to me. You could say the same thing about the puts too. I'm not saying that the puts are a bad deal. It's incredibly cheap there, and I shouldn't even be saying this because now it's probably going to get expensive with our extreme wide coverage that we cover.
Oh my gosh, we move the markets.
Yeah, we don't want to move the markets.
Yeah,
but no, it's unbelievably cheap this year to own an awful lot of time for corn. And I'm not saying run out there buy them. We definitely have strategies that we're working on here, and if you're a client, you're going to see the sheet here very soon. I know I've been saying the last week and a half, but you will see it. It's not like a market that's rocking and rolling. We had a little Ukrainian news today. Wheat came up, corn came up, and so we got a little news. Exports are excellent. But I do have an idea, and I will put it in the sheet. So the clients will see it automatically. Let me know if you're listening and you'd like one. I'll see if I can't get one out to you. And it'll be exactly what we're doing there. 660, 670, 665s. There's a lot of different strike prices, a lot of different premiums. Are guys selling puts, buying calls? Are they buying a call, selling a higher call? It's all a mystery unless you call us. No, just kidding. It's I don't want to get it too complicated.
Just go on Twitter and they'll tell you.
Yeah, they'll tell you. I don't want to get it too complicated. I just know that is an awful lot of time for not very much money.
262 days.
Yeah. Yeah, and it's and look at how close to the money those things are. It's just kind of weird that they have that little hope that corn's going to move. They misprice options all the time. Don't read too much into it. Like, these guys know everything. They've been mispricing soybean options for months in a row now, and they often do. So it's not like these guys know. It's just pretty incredible. They don't think that it could move up 35 cents in between now and the end of summer. I meant do the math. And when I say 35 cents, it's about 10 cents out of the money, and it's about 25 cents. So there's your 35 cents. I just think that I've seen worse prices out there. So I'm all about these September corn calls, and I just have to figure out how I get in and when I get in and what I want to do there. But they have my attention. And then also corn wheat, we'll mention. That spread's getting out towards 80 cents again. And I love the spread. The problem I have with the spread this year, and it's a big problem, is the long leg. I mean, when you don't like, is the wheat. And it's just like, there's not a lot of good news out there for wheat right now. Not a lot of good news at all. So I have a really problem when I don't like either leg to the spread. I don't like necessarily the corn short right now, and I don't like the wheat long. So I think I'm going to pass. This is going to be a hard pass for me. But just know it is meaningful that it is this narrow. It means that down south, where they can feed wheat, or anywhere they can feed wheat, it will sub in for corn. So even though we're going to have better export numbers, right now 247 million ahead of what the USDA's numbers are, just know that the feed and residual use is probably far too high as well. And those numbers will kind of offset each other in these reports. And that's what I would expect. Could we be at 1.8? I think we could be. Could we be at 2? Sure. Could we be at 1.5? That's going to take something special, like a huge yield cut. We were at 1.2 last year, and look what happened.
Right.
So
they said we were at 1.2.
Yeah, we were never at 1.2. And again, back to the spreads. The spreads did tell us we weren't at 1.2 either. So hopefully you learned something today. Spreads are your friend, and you're going to want to know how to read them. Very close cousin to basis. And that should help you in timing the markets a lot better. It isn't the end all be all, and they do move slow. So you're not sitting there focusing on it every day, but it's definitely something that you want to have in your arsenal. Quickly on to cattle.
I was going to make sure. I was just going to say we do need to wrap up quick, but man, we have to touch on cattle because the last couple of days have been something else, huh?
Yes. My advice and I've said this till I was blue in the face over the last week because everyone's calling on cattle. Go look at the 2015 chart and you'll understand exactly what's happening here. That was the last big bull market, 14 into 15, and then how it reacted after it fell. So that I'll leave you with that. Just go look at that chart, and if you can't get it, I'll get it for you, and it will show you exactly what's going on here right now. So it seems like this is going crazy. What happened is feeder cattle got way too cheap relative to where the cash is in the sale barn. Now we're back up there. Live cattle got way too cheap relative to where cash is. Now we're carrying a $10 premium. Wild times, what do we retrace? Like the Fibonacci 31.6%.
Yeah.
So it's a bounce. This is a bounce that you would expect in a bull market. So that we'll leave it at that. This looks a lot like 2015 so far.
Are you saying it looks like a dead cat?
Well, it's going to be volatile. I don't want to. Hey, I'm not not taking sides here. I'm not cheering for one or the other. You get in trouble doing that. So no, just being realistic about it. Yeah, you're going to see a lot of volatility here. Cattle 10 probably got way too cheap, way too quick. But I also don't think the government's going to back down anytime soon. They were just mentioning this last week or the week before, how it's going to take more than 1 or 2 months. And then why do I think like that? Because that's what they did with eggs. They said they want to get the egg price down. They started importing eggs from every single possible location they could get eggs. They started importing them. Same thing's going to happen in beef. I know that's not what a guy wants to hear, but that's what the government says it's going to do. I didn't make this up. They said this is the program they're going with, and I would take them at their word. Sure, they could fail at it miserably. We could go up to new highs, and 5 more packing plants could close. No, just kidding. A lot of things could happen, though. The one did close, and it kind of shows you how fragile the whole system is. So expect a lot of volatility, and go study that 2015 chart. I think that you'll see that a lot of similarities so far that we're seeing play out, and it's not surprising.
You want my prediction?
Sure, let's do it.
We got to go sideways somewhere.
Well, you think this is gonna be it?
I don't know. I'm just. Are you saying? How do you like that for a prediction? I don't know.
Are you telling everybody to sell at the money calls and at the money puts? No, I'm just kidding. That's like the worst idea you can possibly put up. Yeah, do that. Yeah, if it's a bad idea, it must be a good idea to buy that. No, actually, it's very expensive to do anything. Super high risk. Know what you're doing in there if you're doing anything.
Okay, so you just talked about the price of especially bean options, but corn options too, and talked about mispriced options. You want to talk about not mispriced? Well, maybe they are, but you want to talk about some expensive coverage.
Yeah, you're gonna
or speculation.
Yeah, and if you miss, you're afraid and you want to hedge, it's gonna cost you. I mean, one way or the other, it was expensive before it fell, way before it fell. It was expensive after it fell, and it's still very expensive. So,
I mean, it's just driving up the volatility these last few days, especially, which is just making the price even higher.
Yep. So implied volatility is climbing from already very high levels, and it's getting even more expensive. But I would expect a lot more of this in the coming days. For me, it's presented opportunity in the spreads. They've been very good and very kind for a long time. It's not like these home runs that you're getting necessarily, but they've been somewhat predictable.
Right.
So give us a call or email, text, and we'll kind of go over what we have been going. We just put some more on, more in the back end of live cattle. Feeder cattle I've kind of moved away from. They're wild. Even the deferred stuff can get really wild.
Trading hog spreads.
Yeah. Well, speaking of, I do have a hog spread. It's my favorite one ever, and it's setting up beautifully this year. The good news is we have lots of time to talk about that one, at least the next 6 weeks. Although if it gets to a magic number, I'm going to be in, because that magic number has been pretty good. You just have to be a little more patient. But the hogs are setting up fairly decently. I feel like they're probably underpriced here, but it's also a time where hogs can get underpriced. And then Spain, I don't know if you saw that, Asian swine fever. Not good news. That's the biggest EU exporters region. So that could affect hogs. So if it does, we'll start talking more hogs. And we'll definitely talk about the economy and all the interest rates and all that. We didn't get to fit all that stuff in, but we have lots of ground to cover. Markets are moving. Metals we didn't even get to, all-time high in silver.
Oh my gosh, I saw that silver. Actually, my kid asked me, should I buy silver? And I said, take a look at a chart and tell me what you think.
Some of the silver that I bought is finally profitable. Had to go to new highs to get there, though. That shows you how chasing silver rallies in the past. But I'm told this one's the real one.
It's the real deal.
It's the real deal. I probably should have my phone sitting right next to the mic.
Oh, I was just going to say, because we're here, I'm hearing people come in the door. Your phone's ringing, my phone's ringing. So we probably
places to
do.
go.
We'll talk about metals.
Metals.
Let's put it that way. We'll talk about interest rates. We'll talk about hogs someday, but it's not today.
Maybe next episode is going to be the variety show, the potpourri, the markets that you don't often get in, but can be very, very fun to be involved. Dry ways in there. I've been in dry way. Have you?
No,
Very few
I stick
people
to
have.
the, what is it, tiger shrimp.
Tiger shrimp butter. There's also the butter market, which I had a guy with a fairly big account, and even he was scared of butter, and he knew the market really well. So butter is.
I'm guessing there's only like 5 guys trading in there.
Yeah, I don't know. All I know is it moved too much. If it moves too much for him, it automatically moves too much for me. Or it's, I guess, more unpredictable. But there's all kinds of interesting stuff out there. So we'll hit on some of this stuff, and or we'll at least do that during this winter and go over that. So that's all I have for today.
Love it. Why don't you leave your number?
218-731-1578.
Thanks, John.
Sure.
How to spot a top.
How to spot a top.
All right.
Or, know when to market, how to spot a top.